Yo, everyone, welcome back into Crypto's News. It's me, Omar Bam, aka Crypto, your friendly neighborhood source for weekly cryptocurrency news currently. I apologize for being late on this video, but I think it's really nice to do a nice Saturday stream to catch up on some of the news that we haven't been able to cover over, I guess, now about a week and a half. So we're going to be diving into that, talking about what's been going on with the Bitcoin price, overall cryptocurrency prices, what might be driving this, and plenty of other tidbits related to altcoins, privacy, security, and plenty more that you're going to want to know about to stay ahead of the game here in crypto. So remember to subscribe if you're new to the show. Remember to hit like if you enjoy the video. If you dislike it, let me know why in the comments. It would be super helpful so I can continue to make the show good for you guys. So let's go ahead and start off, as we often do here, with Coingecko. So as you can see, the prices for the last 7 days for cryptocurrencies, for the most part, outside of a few altcoins like Toncoin, which are outliers, we're seeing red across the board here. It has ticked up a little bit as we've seen somewhat of a rebound following some news, but still red overall over the last 7 days. But over the last 24 hours, we have Bitcoin up 0.3% at $66,231, and I think it was 35 cents. It just changed. And Ethereum is currently at $3,568.65. You know, it's funny because I've been going to Coingecko for so long, and I don't remember these prices ever being live, but it's really cool to see that they actually change now in real time. I appreciate that bit of a change. How y'all doing today? I hope you guys are doing awesome and that the stream is working out for you guys. I can't really tell fully if everything's working, but hopefully it is good. We're going to continue forward here with what relevant news might have driven this recent price action. So Decrypt here reporting Bitcoin price tanks as nearly $300 million in longs get wrecked. So this was pretty much right around when I did my last video. So this was on June 7th, 2024. Plummeting, as it says here, we had liquidations of almost $300 million across Bitcoin, Ethereum, and actually many other alts as well. This was driven because of the Fed pointing to how rates may be kept higher for longer, as opposed to we might be seeing some interest rate cuts coming up very soon, maybe this month, maybe next month here in the summer. And then we'll finish up with 3 different rate cuts by the end of the year. That was pretty much the expectation, but that has been turned around as we're only expecting really one interest rate hike now, or I'm sorry, decline, lowering of interest rates by 25 basis points versus the 75 that had previously been expected. So this tempered growth, or actually prices climbing for different risk assets such as cryptocurrencies. But as I mentioned, we have seen a rebound. But yeah, here it is, exactly what I'm talking about. They ended their benchmark Fed fund range expectation to end out the year at 5.1% versus previously ending at 4.6%. So that means that rates are now expected to remain up at that level with just one rate decrease here. And this is potentially, I think, what drove the markets to kind of puke out here. We had massive liquidations for long positions, as we mentioned, for cryptocurrencies. And that meant that, you know, people were taking positions because they thought we're in a bull market, post-halvening hype, ETF for Ethereum, ETF for Bitcoin, and so many other relevant things. I mean, I don't want to say the T name. I'm trying not to talk about politicians here, but talking about becoming the crypto president, and you have here like Scaramucci then telling the B guy that he now has to embrace cryptocurrency. So there's a lot of reason for optimism here that still remains. But still, when you have these really long expectations, people taking these long positions, and suddenly prices reverse for whatever reason, you see these cascading liquidations that cause the price to drop. And that's exactly what we saw. Bitcoin dropping below 70,000 down to 66,000 now, and it was below even that, although it stayed over 60,000. And Ethereum also stayed over $3,000, but it dropped down quite a bit and definitely seemed closer to $3,000 than it did to $4,000, despite expectations of this ETF getting approved and available for trading very shortly. So to me, this is just opportunity. Personally, that's the way I'm seeing it. This is my opinion. I think this would be a great buy the dip moment, just based on my personal experience. If I had extra capital to deploy here, I would very happily put it into crypto. Leverage trading, extremely risky. Don't recommend that. And just patience tends to be the best way to go about things here. The Fed is between a rock and a very hard place, a near impossible place, because inflation still remains elevated up there. It actually ended up a bit better, which is why we're seeing that prices did tick up, which is what I should mention here, is that it was expected that we were going to see a 0.1% increase on the CPI, on this consumer inflation report, month over month, and it actually came out to 0%. So we had no inflation, apparently, looking at what they're looking at over the last month. And on a yearly basis, it only went up. It's up 3.3%, and they were expecting 3.4%. So this is better than expected, and it could mean that the fight against inflation is being won. At least some are saying that that is what the Fed is trying to do here. Like in Peter Schiff's recent podcast, he talks about how the Fed is basically trying to make it look like they're winning this fight because they know they have no choice. They will eventually have to lower interest rates. An economy cannot handle this modern economy that's debt-backed, over-leveraged to the eyeballs and tits and whatever else you want to say. But with the amount of debt out there, keeping interest rates high is catastrophic. So they really have no choice here, which could potentially mean more inflation, and I think really create that mentality in people and trying to understand what holds its value. Is it going to be gold? I personally don't think so, but it has performed quite well actually over the last year. I think cryptocurrencies will really be understood more, at least the strong cryptos, not the meme coins and so on. I think like the Bitcoins out there, the Ethereums out there will have real staying power. And just as a quick aside here, because people will say, well, why even bother with Ethereum, right? Because we have Bitcoin already. We have a hard cap, hard coded, been around forever, can divide it into how many Satoshis you want. Everybody can get a share, Bitcoiners to the max. Well, I will say to that, smart contracts. Smart contracts are what drove me to Ethereum. Incredible. The ability to program things that money can do over time or with certain things that happen, and the ability to program so many different kinds of contracts, I think is extremely underutilized in so many different areas. And this is potentially why you hear Van Eck pointing to a $23,000 ETH in just 6 years by 2030. They're talking about free cash flow. We're talking about investments into Ethereum from so many different areas. And yeah, like 2017 was basically trying to explore those ideas, but actually seeing what worked and how those get implemented will be coming up shortly. And I think we'll be driving huge value into that ecosystem. For me, I think those are the two real blue chip cryptos here. There are plenty others, but we'll get into smart contracts and Bitcoin versus Ethereum in just a little bit in other news. But I just wanted to catch you guys up, of course, on the economy. So I guess more specific to the Bitcoin economy, I thought this was interesting. Bitcoin miners are cashing in on a lot of the Bitcoin that they've been holding on to. Look at this one. Marathon Digital offloaded 1,400 Bitcoin worth nearly $100 million since the start of June of this month. We're seeing huge transfers of Bitcoin from these miners into exchanges, primarily from the BTC.com mining pool and into Binance. A miner sold at least 1,200 Bitcoin on June 10th, the highest daily total in 10 months. A lot of this is also happening over-the-counter exchanges, which are seeing huge climbing volume from these kinds of miners. And I thought this was notable as well, which would be what is driving this. And you guys already know what I'm going to say. The halvening. Daily revenue for miners stands at $35 million, down 55% from the peak of $78 million in March. The reduction in revenue can be attributed to lower transaction fees after the halving. I don't know that last sentence is correct. I haven't actually looked at the transaction fees, but it's the halvening, right? So the block reward itself getting cut in half that is issued out. What I've actually heard is that being in the bull market, seeing the interest in cryptocurrencies that we've been hearing about has actually been causing higher transaction fees that have been helping miners. But if it is the case that they're still losing more than a half of what they were earning before, you can see why they would try to sell at this time around some of this hype. I don't know how long this will continue, if this will continue, but it makes sense that as the price climbs, some of these miners that have been taking a hit to profits in order to survive will sell what they're holding on to. That's why oftentimes you see them trading futures and things like that to take positions as well on this and to try to make some profit either way. But it's a completely different business than I think what most are used to when you're talking about mining revenue. And the psychology of it is, when do they sell, right? Do they know something that we don't know? How do they forecast? All we do know is that at least some pressure that has been hitting Bitcoin recently appears to be coming from miners. And Bitcoin versus Ethereum, I guess, food for thought, right? That was one of the things that does, at least from a price perspective, make Ethereum look perhaps more interesting, is that you do have miners that have more costs when it comes to validating the Bitcoin network. And it just gets harder and harder to do as a small-time miner. It becomes more centralized that way. While with Ethereum, it can become centralized because you earn those coins and stake them and restake them and get more that way. And that can lead to centralization, of course, of capital. But from what I'm seeing right now, validation of Ethereum looks extremely healthy. At least the amount of individual participants. Pools remain a problem on both kinds of networks. Primarily a Bitcoin, I guess you could say, but you see the same thing happening with other tokens like Reth on Ethereum, where people are seeking other ways to validate the network. But I think there's more of an incentive to hold on to your ETH to get more versus holding on to your Bitcoin when you're a miner in hopes that the price continues to climb, especially looking at everything you're looking at with transaction fees and the lowering of block reward. Guess what, guys? In 4 years, it'll get cut in half again, so that's going to be difficult. Hopefully the price does appreciate more than 50% by then from the last point. But that remains to be seen. Every cycle is different, and I'll try to update you guys as we go on. Just want to make sure you guys were aware of that one. This was notable. So this is the senior ETF analyst for Bloomberg, probably knows way more about ETFs than I do. No, definitely knows way more about ETF than probably most of us, and timelines and how they work. And he's talking about the launch of the Ether ETF, moving up from his prior expected date of July 4th up 2 days to July 2nd, before the July 4th Independence Day weekend here in the United States. He said, update, we are moving up our over-under date for the launch of Spot Ether ETF to July 2nd. Hearing the staff sent issuers comments on S1s today, and they're pretty light, nothing major, asking for them back in a week. Decent chance they work to declare them effective the next week and get it off their plate before holiday weekend. Anything possible, but this is our best guess as of now. Previously, as you mentioned, it was, again, July 4th. Ethereum Maximus asked Eric, when S1 is approved, how long after do you think that the ETF goes live? Taking days or weeks or what? Next day typically. So that means the ETF could be live, but will it be available on major brokerages? That could take a while, as we've talked about with the Bitcoin ETF. It could take up to 3 months for certain offices to want to incorporate an ETF like this. So we could see gains through that period as well. As a heads up there. So that could be coming up very, very soon. In just like a couple of weeks, basically, we could potentially see that Ethereum ETF approved. And if it is approved, we might as well see a similar 60% price climb in Ethereum like we saw when the Bitcoin ETF was approved. We didn't really see any notable real sell-off afterwards. So if it follows similarly, we could see higher prices very soon for ETH. So Robinhood is going to, hey, what's up, guys? I'm like, God, you guys showed up. The chat was quite empty when I started. I guess since I don't do videos on Saturday and potentially shadow banned by YouTube, I don't know if there were even going to be people showing up here, but it's really nice to see you. Iceland calling, my old pal. Eric, we are going to make it. Absolutely. Kevin, good evening as always. Thanks for all the messages, my man. Good AI crypto projects. That is a really good suggestion for a video, Eric. I can try to look into that. I haven't personally messed too much with AI crypto stuff, although I'm extremely fascinated in AI, as I mentioned before. Like most of the news that I read, It's probably veering more towards trying to understand and get my head around AI and all the news and even crypto these days. Crypto feels like it's on rails at this point. AI is just like so wild to see what happens every day. So I'm fascinated. And to see the marriage between both of them would be a real dream. And I'm sure there are some opportunities out there that exist. So yeah, let me know, guys, if there's something you think I should look into, and I will try to check that out in the comments down below. Cool. Happy your sound is good, Josh. And am I still in Vegas? No, I'm actually in Texas right now, Central Texas, and it is hot, dude. It is hot. Oh, but actually Vegas was hotter, so I don't know what I'm complaining about. Miami was hotter with the humidity. LA was nice. I highly recommend LA for the weather, but I'm sure you guys know that one. Anyway, so Robinhood is going to be acquiring Bitstamp. Bitstamp is one of the longest standing cryptocurrency exchanges, over 80 different pairs and tokens that are available, different kinds of products that they offer on there. It's a UK-based exchange, and it's going to be purchased by Robinhood. They've announced a deal for $200 million, which seems pretty low to me to buy a major cryptocurrency player here. I don't know how that deal came to be, and you had different entities that were advising this deal, such as Galaxy Digital, and there was another major firm as well that advised them. But anyway, they're going to be joining forces, it says here, fostering collaboration between Bitstamp and Robinhood, innovation and knowledge sharing across continents as they try to grow their international presence, rivaling Coinbase and other exchanges that have also had a major push. The exchange also has 50 active licenses and registrations globally, so that's probably why Robinhood had chose to focus on them. And $200 million, dang, how did they come to that deal? Quite insane. You would expect at least a major crypto exchange. Oh, Barclays Capital, that was the other advisor in addition to Galaxy Digital. Ha. Anyway, yeah, Barclays, wow. They're the ones who make the American Airlines MasterCard, aren't they? Big bank, big bank. Anyway, yeah, we'll see what that brings. As far as interest from the community, people are saying this could be negative. They don't really like how Robinhood sells their trade data, their order book flow information. That's pretty much how they make a lot of their capital, front running in some cases. So I can see how this would not be something super that people would be excited about, but I can see why Robinhood would be, especially in this scenario. So a heads up on that one. Roger Ver. So I have talked about Bitcoin Jesus, the owner of Bitcoin.com, someone who had a big stake in Bitcoin very early on. Venture capitalist, probably the first investor in Bitcoin startups. That's what I hear, and that's what I hear for him and others. Interviewed him a few times. He got arrested in Spain after giving up U.S. citizenship and moving here and there, and then possibly having omitted some information on his tax reports. And so he was arrested, seeking extradition to the United States. It looks like he has been released on bail. I didn't mean to mention that this week. Roger Ver was allowed to leave jail May 17th. After posting $163,000 in bail on the condition that he remain in Spain and had in his passport, according to a copy of the judge's decision seen by Bloomberg News. Ver must also go to court every 2 days, as I had mentioned in my last video, which was the video in the car that I did driving. The prosecutor's appeal against the release was rejected 2 weeks later, so that did work out for him. And this is confirmed as well. Memory Dealers is his account on Reddit. So here it is, Roger Ver, Bitcoin entrepreneur, Bitcoin.com, Memory Dealers 10 days ago. He just simply wrote, glad to be out. And that was pretty much all he could say. Of course, I'm sure he is trying to stay somewhat mum. He's probably not as dumb as some of the people who go against what lawyers have to say. Sam Bankman-Fried. But yeah, I think it's wise to stay quiet for the most part as he deals with this. But, you know, good for him. That's the way I feel about it. Coingecko data breach incident leaks 1.9 million users' data. So, yeah, I mean, you guys know I use Coingecko in all my videos. Fortunately for me, I never made an account. I didn't see the real benefit of doing it. Didn't feel like it. I just check out the website. I appreciate that them letting me use the website without having to sign up. But unfortunately, if you did sign up for Coingecko, there was a data breach through one of their email providers, the third-party email marketing platform, GetResponse. An employee's account was apparently breached. Coingecko heard about this, but unfortunately it was too late. Phishing emails were sent out from GetResponse to 1,916,596 contacts. And this included information that was leaked, such as your name if provided during sign up. Why would you do that? Email address, IP address, and location of email opens. Other metadata. That's the part that kind of worries me the most. Other metadata, such as account sign up date, subscription plan, and what else did you get from our cookies and all that? Okay, your Coingecko user account remains secure. No passwords were compromised. I mean, like, password is like the easiest thing to replace. Getting my email address replaced is not as easy, right? So you might be getting flooded with all sorts of phishing emails, especially if you're using an old email address that you've used across any number of different providers. You've very likely been pooned in the past, if you guys get where I'm coming from with that. So just a reminder, as always, to be very careful opening emails from unfamiliar domains. Double, triple check those domains. Don't connect your wallet and approve transactions without being super careful. Avoid clicking on links, downloading attachments. Even PDFs can be a huge problem. Excel spreadsheets can be an issue I've seen in the past. Beware of emails that claim to offer token airdrops. There is no officially sanctioned token airdrop that Coingecko has announced. So a heads up on that latest hack. It's so concerning. Bitcoin layer 2 network stacks halted for 9 hours. What happened? So this is in reference to something that I alluded to earlier in Bitcoin versus Ethereum and how you can do smart contracts on Ethereum. It's in a way possible to do smart contracts somewhat simply natively on Bitcoin, but if you really want to do more complicated things, you have to use the layer 2 network. One of those layer 2 networks was called Stacks, and they had an issue where the network halted for 9 hours and users could not process these layer 2 transactions across this because of a disruption that came from a Bitcoin block reorg. The developers announced this, of course, as transparently as possible, talked about fixes that they're working to make this more stable in the future. And in particular, they talked about how they are waiting for the Nakamoto upgrade, which was supposed to come out last spring for Bitcoin, but has yet to release. That Nakamoto upgrade was delayed at the last minute as potential issues, according to Decrypt, were deemed too severe to address in a later update, and now it's set to roll out in August. But this Nakamoto upgrade is designed to eliminate the possibility of forks. How are they going to do that? I should read more into this. And mitigate the impact of Bitcoin reorganizations. But you can see how that would be useful to layer 2 networks that can be disrupted when there are issues like this, unexpected minor issues, as they are calling it. This was going around in cryptocurrency social media, fishy Coinbase emails that users were getting en masse. Here's one by SRAMP17. Received this email from Coinbase, states my name on my bank account doesn't match my Coinbase account. I've had both bank and Coinbase account for years. Nothing has changed. And I've had a recurring weekly buy going for a short while now with no issues. Also, both names that I've blacked out are identical aside from capital letters. Seems off to me. So anyways, you can see there from Coinbase, no reply at info.coinbase.com. You always have to be careful though with email spoofing. So it's totally normal to assume this is phishing. In fact, I would rather assume it's phishing rather than not before clicking on something in an email like this that says, please verify your identity and change your name so that it matches your bank account. So it was wise for users to go out and start sharing this on social media to figure out if they were being phished. It turned out, however, that this was a legitimate email from Coinbase. I don't know if you guys got one yourself. Hey, what's up, Nickel? Nice to see you, man. And thank you, Moonshine Fuel. Texas, good choice. It's been good. I mean, the tax situation is great. It's a lot cheaper out here. Gas is cheap. Definitely quite a few benefits. People are really nice here, like more genuinely nice than I'm used to in some other places. Yeah. Anyway, so this was confirmed by Coinbase. Erroneous delayed transaction email to customers. This is an incident that has been resolved. A fix has been implemented, but they said they were aware that customers may have received an email citing that their transactions are delayed because their bank account did not match their account name. This message can be disregarded pending further contact from us. We're aware of the issue and are working on a fix, which again was fixed. So that was real. Something else, however, that might not be real and try to phish you is a warning that the CISA in the United States is giving, the Cybersecurity and Infrastructure Security Agency, warning of a surge in government official impersonations that are targeting crypto customers. So they issued an alert on June 12th. They're saying the staff will never request money wiring, cash, cryptocurrency, or use gift cards. It's so funny that you have to say, we're not going to ask you for a Target gift card. I don't know. I don't know. This is a clown world. If you suspect you are a target of an impersonation scammer claiming to be a CISA employee, do not pay the caller. Take note of the phone number calling you. Hang up immediately and validate the contact by calling CISA. So it seems that some of these scammers and impersonators are using real employees' names to make themselves look more legitimate. You might look up their name on LinkedIn. Oh, works for this agency. Oh, that looks legit. Okay, here's a Target gift card, bro. Get yourself a donut or something and just leave me alone, right? I don't know how this works. But anyway, I wanted to give you a heads up on that. Some people aren't aware that oftentimes these agencies will not call you for the most part. They just write letters through the mail conventionally, and that's how you respond. So just stay wary as always. Have to pepper that kind of news in there always. Former Binance CEO, CZ, according to a report, purportedly owns 64% of those Binance BNB tokens that are available to pay for rewards and redeem for other things on Binance and I guess in the wider crypto ecosystem. So this was a forensic analysis that was conducted by Grey Wolf Analytics. So it looks like CZ owns 94 million BNB tokens, and between CZ and Binance, they jointly hold 71% of the 147 million BNB in circulation. Zhao, so CZ has a 90% equity stake in Binance, which if they hold, I don't know how exactly these numbers work, because it's 71% of the 147 million BNB in circulation right now. So if he has a 90% stake of that, that's like 57% of all the tokens in circulation. But it says here up here, 64% is what the report says. So I'm sure I'm missing a crucial piece of information here. But still, it remains that he has quite a bit of net worth. And he will surely get to enjoy that in 4 months when he gets out of jail or whatever it is. He has become the 24th richest individual in the planet with an estimated $61 billion net worth. Personally, I feel that there's plenty of people in the list of richest people in the world who are probably into crypto and just choose to remain private. I know when I went out to conferences and I talked to folks and I went out to dinner with folks, I met some of these individuals and they preferred to be low key. They preferred to use a pseudonym when referring to them. They preferred that they would not, of course, share their phone number with you or anything like that. They're out there. There's some really, really rich people out there. But yeah, that's just a heads up on CZ there. And I only mention him particularly. I don't really like to point out how much money people have because it's very obvious that he's already extremely wealthy and everyone already knows that, which is why I bring that up. Anyway, Ethereum spot ETFs to start trading July 2nd. Oh, I already talked about that one. Next one, Hedera has removed, Hedera has removed community runnable nodes from their roadmap. So you might be familiar with Hedera, the producers of Hashgraph. And in their roadmap, they had a focus on creating nodes that the community could run without having to run a supercomputer. Here are the specs for those nodes. You need an Intel Xeon or AMD EPYC with 24 cores, 48 threads. You need a sustained 1 gigabyte per second internet bandwidth via single 1 gigabyte, 256 gigabyte, whatever. Point is, for most people, they do not have 5 terabytes of free SSD space and extremely high uptime, reliable, fast 1 gigabit internet speed. So they cannot run a node. So you see for the most part that the list of nodes running Hashgraph is quite centralized. 31 nodes run by huge corporations, hosted for Dell here in Frankfurt, Germany, Chainlink Labs, Standard Bank, IBM. You can see that it's not like, oh, Joe Schmo, my next door neighbor, running a node. There's only 31 nodes here, which is a far cry from true decentralization. And I'm not going to get harp on the benefits of decentralization in this particular video, though I've done it so very much as to why that is important. But anyway, it's funny. They basically scrubbed their plans for now from their roadmap. And they did announce this officially. We wanted to provide more context regarding the removal of community nodes from the Hedera roadmap. We remain committed to creating technology that enables community nodes, and we are actively working on the foundational elements necessary to ensure Hedera maintains its performance and stability after the change. The roadmap change was made to ensure that it reflects near-term deliverables, so 2 to 3 quarters, rather than indicating a complete removal of community nodes from our priorities. They're currently working on several dependent features that are necessary for those community nodes, including simplifying node installation and operations and decentralizing Hedera address book updates. And they also have other plans in the future that they don't publish on the roadmap, they said, such as sharding or entity archival rent. The issue, I guess I would say, is that is such an important tenet of like what crypto is supposed to be. Why not just run a database, as others point out, on an SQL server if it's going to be so centralized? Just invite these corporations into your group. Maybe because by calling it a blockchain, you take your hands off from making it look like you're completely just running a server together, which is pretty much what it is at this time. If you are hoping for decentralization for Hedera and Hashgraph, it does seem like it's something that they do want to do eventually, but it's no longer, it seems, a completely primary focus, at least until they get those foundational elements. But that is quite disappointing. And I actually didn't check out what the price of Hashgraph has done. Oh, dang, that did not look good. That did not look good. What? Come on. What do we got here? Hedera Hashgraph down 29.43%. Is that right? I don't even know how to use this site anymore. Hashgraph. Let's try a difference. Hashgraph chart. Hedera Hashgraph price. So it's down 1.53% over the last day, according to CoinMarketCap. CoinMarketCap, my old friend. I miss you. Yeah, it definitely does not look like it's sustaining anything really major in regards to a run. It seems to have been pretty much downhill since April 23rd, with sizable hits recently. It looks like on June 5th, the price was around 10 cents, and it was down to 0.084 cents as of today. So definitely taking a hit. And I don't know, maybe part of it is caring about decentralization, although I feel like the bigger communities, corporations, and those that they shield to probably don't care about decentralization as much. Others have pointed out Solana has its own drawbacks, but it's still quite the fanboy, right? So this is one of those situations where me as an investor is completely different than somebody else who's just trying to take a stake in a coin for some sort of near-term profit reason. So I just kind of have to like clarify that own dissonance in my own brain. But anyway, yeah, heads up there on that. There was also an exploit that happened with Holograph, an omni-chain tokenization infrastructure. So this is built on omni-chain. It's to allow for the same smart contract or the same wallet address to work across different kinds of chains. A former contractor, it was explained, exploited the Holograph protocol to mint an additional 1 billion of these tokens that were worth about $17 million. And the malicious actor started sending them out to different exchanges. Holograph announced that they contacted some of these exchanges and they were able to freeze around 20% of these tokens, and they locked down the protocol pending fixes and more investigation. But it looks like the exploiter it's still worth about $7 million what he has. Probably actually, well, I don't know if he sold any, but he did convert some into Tether. So he's definitely trying to erase his trail somewhat. It looks like he has sent money to Bybit, to KuCoin, to Gates, to BitGet, and to Backpack. I have not heard of Backpack before. And at least 200 million of the 1 billion of the additional HLG tokens have been frozen. And that token has been plummeting. I don't have to look that one up because I saw it before. The token was down something like 90% over the first day. So problematic. But these kinds of mistakes, an expensive lesson, do help the ecosystem grow. They add to the amount of information and available exploits that will help protect other protocols in the future, if not this protocol. And I think it's great that mistakes can happen to help others. Of course, if you're an investor in this project for whatever reason, it is not great news, right? I apologize for that one, of course, but Many of you guys probably don't even follow that. Not followed by anyone you're following. And I follow a lot of the top people in crypto that you might be aware of, and no one really seems interested in this one. But I did wish to mention that because people will get into whatever meme coin all the time, or whatever new protocol has been created. But that's why you have to have a solid team. That's why you have to really have decentralized development and so on, because how could you audit and make sure that this is going to be a great project to be into that will not be printing 1 billion of the token and driving down the value of your investment? This is a real risk vector that you should consider when investing yourself. As we move here towards the end of the video, I wanted to share this with you guys. Bitcoin returns. I found this posted, I guess it was posted on June 4th, 2024. I had saved it and meant to mention it here on the show. But check out these numbers, guys. Are these rookie numbers? Nah. Look at that first year Bitcoin. It was the price of $0.003, so less than a penny. It ended the year up about 30 cents, and it went up 9,900% in that first year. And you have huge gains for most of Bitcoin's history on a yearly level, right? 2011 up 1,473%, 2012 186%. Those are rookie numbers. 2013, 5,507%. 2014, we got hit, down 58%. But then back to the party, right? 2015, positive. 2016, positive. 2017, positive. Another red day, 73% loss in 2018. And it goes on. But you can see that in between these red periods, of which we've only had 3 since Bitcoin history, where it has ended the year in the red, that there are about 3 years in between that are positive. Then you get a red year, a correction year, looking at this. So if this does ring true again, and it's not always the case, right? Like, check out that first year of Bitcoin's launch. We had 4 years of green, but then 3 years of green in between all the red. So that would mean we would have 1 more down here. So that would probably mean that 2025 will also end in positive, as well as this year. And then we could see a correction in 2026, which would make sense from like my own experience in the markets. But I really was only involved since 2015, following this closely. So this could be my own bias here looking at this chart. But we can't completely ignore the data points. And the data point here is that there are quite a few years of green before we get those corrections, and you will miss out if you get out a little bit too early, of course. So just a little bit food for thought there by Charlie Belello on Twitter. And I will leave it there for you guys. I appreciate you guys making it out to the show. It means so very much. Any update on Richard's case? Nah, Jas, actually, I haven't even thought about Richard that much recently, but I'll have to look into it and see what I can find. That would actually make for some good content, so thank you for that suggestion, Jas. Hope you're doing well. Let's finish up here with our quote of the day. It's not really related to crypto, but hopefully it has some value for your life. I know sometimes when I pick a quote, it's something that resonated with me that maybe I hadn't mentioned before. Although I've mentioned John Wooden because I do appreciate so much of his leadership, being UCLA head coach for such a long period of time and creating the opportunity for so many championships. But anyway, a coach is someone who can give correction without causing resentment. John Wooden. I wish you all a fantastic Father's Day weekend. Much love to all of you who are fathers, and to those who are still around and those who might not be. I send love your and their ways. Take care, everyone. Much love. Thank you for making it out. Remember to hit like and stay cryptic. Peace.